Well, I think as we head into 2026, there are a lot of positives that we can take into the year. And as you compare it to 2025, there was a lot of uncertainty coming into the year. An administration change made things very tumultuous at the beginning. But what we saw was a very resilient consumer. And relatively strong earnings throughout most of the year that really set us up pretty well for this coming year. So, to your point that you made earlier, I do think as we head into 2026, there could be a broadening of where money is going, and I think it's reasonable to maybe be a little optimistic as we head into 2026.
All right, Rick. So if there's going to be this broadening next year, where I think we're all on board with that, but is tech and particularly tech around AI still going to be the leader?
I think it very well could. That obviously it has been the leader, and that is what makes everybody a little bit nervous when you see that it's kind of priced for perfection right now. But the innovation that exists within the AI space, and then you couple that with the infrastructure spending that surrounds it, and that is so critical to the computational power that AI requires. I do think it will continue to be a really big catalyst, and those names could be very good things to be invested in as we get into 2026 and beyond there.
Hey, Rick, as we go into 2026, what's your allocation, stocks, bonds, maybe even alternatives as well? How do you think about that?
Yeah, diversification is going to be really important. Again, as we talk about broadening and you look at what's happened in our markets over the last couple of years, it's been a very narrow trade. And so your average investor may feel like, oh, I just want to get more weighted into those tech stocks and just kind of ride the wave. But right now, I think it's critical to be allocated across multi-sectors. Real estate is one that has kind of been unloved for the last couple of years that I think definitely presents an opportunity. You also see the banking sector as the yield curve is starting to normalize a little bit. I think there may be some opportunity for investors to look in some other areas outside of tech and take that good diversification approach.
Hey, Rick, is there anything you're actually staying away from in the new year?
You know, heading into the new year, the things that we are probably most concerned about, I think you're seeing a policy shift when it comes to the renewable energy. And so I think energy is a really good sector to be invested in, but I'm not sure from a policy perspective that we will see some of those wind and solar projects in the past that have gotten a lot of attention and a lot of capital flow. I think you need to be careful. But I could also make an argument there, even though I'm a little hesitant there. We do have an all hands on deck approach right now when it comes to the energy need, because the AI demand for energy is just so large.
So, Rick, here, what we've seen here is large cap has really been the performer here from the equity market perspective here. How do you think about small to mid caps? A lot of times people want us to take a look there, but it just doesn't seem to be a good place for longer term performance. How do you think about small and mid cap stocks?
Yeah, it's funny. I think we've all been waiting for that small mid cap really big explosion because we've all been calling for it and it just hasn't quite happened. I do think though, when you look at the interest rate environment that we're in, where rates have come down and we may see the rates coming down even a little further. I think there is an opportunity with small and mid cap, and particularly when you look at mergers and acquisition activity. I think that could be something that we see on the horizon, getting a little bit of an increase, and that typically bodes pretty well for those small and mid cap names.
And what about outside the U.S.? I mean, we saw European markets, a lot of the emerging markets outperform the U.S. in a year when the U.S. didn't do too shabbily, right? I mean, the NASDAQ up 22% year to date, S&P up about 18% year to date. So do you dabble, or how much do you get involved with the markets outside the U.S.?
Yeah, I mean, I think you need to have exposure to international markets in your portfolio. And obviously, all of the trade things that were happening at the beginning of this year kind of scrambled the deck a little bit. And so it's not for the faint of heart when it comes to those international markets, but I do think they belong in any diversified portfolio, and we do try to maintain allocations there. It's just good planning, and I think we may see some opportunities there for 2026 as well.